The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk. Busy old day. I'm Steve Sedgwick in London with Sylvia Mara looking at the markets. We've got Karen in Lisbon, Annetta's in Berlin, and Dan is in Baku. These are your headlines. Well, President-elect Donald Trump picks his new defense and intelligence heads. But it's Elon Musk once again driving attention, taking up leadership of the new, wait for the acronym, Department of Government Efficiency. Yes, you are right, the acronym is DOGE. Okay, let's move on. Siemens Energy raising its mid-term outlook after reporting a record order backlog of 123 billion euros, buoyed by a turnaround at the turbine unit Gamesa. Delighted to say we'll be speaking to Christian Bruch, the CEO, in a couple of minutes' time.
Meantime, US majors snap their post-election winning streak. Treasury yields spike and the dollar index hits a 6-month high as investors get to grips with the incoming Trump administration. And here, global tech leaders gather at Web Summit in Lisbon with the prospect of looser regulations and heightened trade tensions under President-elect Trump. Microsoft President Brad Smith tells CNBC that Europe remains key for the company.
There are opportunities, I think, for this next administration in the U.S. to use technology in new ways, to address critical technology policy issues, even in some better ways. The message I'm here to convey is our support for Europe as a company at Microsoft is steadfast.
And Germany gets set to vote on February 23rd after the collapse of Chancellor Olaf Scholz's governing coalition. The economy minister and likely Greens candidate Robert Habeck says Berlin remains a reliable partner.
Nobody wants us to be the master of Europe and say basta and come to Europe and say we know everything better, you have just to listen. Our role is always to be on the side of creating a majority, to help, bringing the next step, making the next step possible.
The news gods are being kind on a daily basis, not least since Donald Trump won the US election. Now, ahead of his inauguration next year, he has now named the ex-owner and Tesla CEO Elon Musk to a new role, leading a new, quote, Department of Government Energy. Of efficiency. Now, that is DOGE, which, as you'll all well know, what started off as a joke, the Dogecoin. But there you go. So Elon Musk has got his joke right to the top of US government. Now, he'll be alongside the Republican primary contender Vivek Ramaswamy. Trump said the group would exist outside of government and deliver drastic change, giving a deadline of July 4th, 2026 to complete its work. In a post on X, Mr. Musk described himself as a threat to bureaucracy. Let me ask you a question, ladies and gentlemen, because I've looked at the numbers. I spent a lot of time looking at the CBO numbers. In fact, I've got the CBO budget printed out for me here. I'm not sure where he's going to find his $2 trillion. If he does, phenomenal. I can ask the question. I'm not saying he's not going to do it. I'm just saying if he finds his $2 trillion a year, phenomenal performance as well. There's a lot of non-discretionary spending out there, including defense, which I can't see him being able to attack. But what is very interesting is, I have a question for you. Is this Department of Efficiency going to be about cutting regulations so that business benefits, or is it going to be about cutting spending so that the fiscal deficit declines? I think the latter is very difficult. I think the former could well be the agenda here. Let us be brutally honest about it. Is this about cutting regulation so that businesses have less rules and less hoops to jump through as well? I do wonder if it's about, for him, that rather than the efficiencies of cutting spending on the deficit, because it's very, very hard to cut the $2 trillion plus that he's been talking about. So, President-elect Donald Trump says he has chosen Fox News host and veteran, he actually was a National Guardsman, Pete Hegseth, as his Secretary of Defense. Now, Hegseth, who has no Pentagon or government experience, played a role in Trump's pardons of former soldiers convicted of war crimes in his first term, and said on a podcast during the election campaign that the chairman of the Joint Chiefs and any generals involved in diversity initiatives should be fired. Trump also named the former director of national intelligence, John Ratcliffe, as his pick for director of the CIA, describing the noted critic of the Mueller investigation into Russian election interference as a warrior for truth and honesty. Well, NBC News is still not yet able to project the control of the House of Representatives, counting ongoing in a number of close races. The Republican Party is 2 seats away from a majority, which would complete a sweep of control in Congress. Right, let us get to corporate news, because I can tell you the Siemens Energy figures. Well, do you know, we spent a long time talking to the CEO of Siemens Energy about just how tough things are, but the market decided round about, let me just get this right, in October 2023, so about a year ago, that the doom and gloom was enough at this company, and actually it had the seeds of recovery. Well, now they're talking about a new order backlog, record 123 billion euros, net profit margins 10 to 12% by 2028. So looking really, really positive in these figures. And so that's why it's really great to speak to Christian Bruch, the CEO of Siemens Energy, and Netta joined this conversation as well. Because Christian, we have spent a lot of time, you and I, you and various journalists, you and the media, you and the analysts, Christian, can you hear me? Good morning, sir.
I can hear you. You're on and off, but I can hear you. Let's give it a try.
Okay, let's give it a try then. Christian, we spent a lot of time talking about the negativity at Gamesa and how that was blighting the broader performance of the company. That all seems to be in the past now, and actually the company seems to be firing on all cylinders.
Well, first of all, I'm super happy that we had a successful 2024. We achieved all targets and obviously partly overachieved our own KPIs, which we set ourselves. We are stepwise turning around Siemens Gamesa. It's not done yet. I want to be very, very clear that we still have a lot of work ahead of us. We are not there yet where we want to be, but we gave an outlook, really, where do we want to go? And obviously where we are playing a role for the energy transition on the one side and this massive demand increase which we see on the electricity side.
Where do you have the greatest concerns for that recovery story? Is it in the internal execution of your own recovery, or actually is it in the broader thematic? And let us be brutally honest, Christian, at a Baku where there are dozens of world leaders not attending, including from some of the biggest nations and the biggest emitters in the world, is the energy transition losing steam?
Well, first of all, I mean, what you see in our order book and in our successes in 2024, we are benefiting from this massive increase in electricity demand. And this is obviously coming from the combination, what we have in our portfolio, really from electricity grids technologies over to very efficient fossil technologies and really down to renewables and new type of technologies. So we have a very broad portfolio. At the end, for us, the key question is electricity demand growing? And absolutely, we are in an era of electricity growth. What is an issue, and I would absolutely agree, the things we have in our own hands, like turning around the company, doing our factories better, doing our work processes better, this we can manage. Obviously, we are dependent on an international trade. That is not a question like a lot of international companies. And this is where I watch, obviously, carefully what is happening and are we able to really manage international interconnected supply chains. This will be the area of effort which we have to put on top of everything, but it's really more along these lines. But in terms of market growth, what I'm looking at is really, is electricity growing? And there I clearly have to say absolutely yes.
Christian, it's Annette in Berlin. That brings me directly to my question, what Donald Trump as new president-elect in the United States might mean for your company. A, because he is seen not to be a big fan of investment in climate-friendly technologies, and B, because there are looming tariffs. So what is your early assessment here?
Yeah, first of all, I would say let's see what's coming. And let's also remember from the first term of Donald Trump, where there was the highest additions in onshore wind power because it was driven really by the respective states. And there we have to see on how this play out. But what I want to clearly say is we have around 13,000 employees in the US. We run 11 factories. So we are very US company. So we're very local. And we do a lot of business on the gas services, on the grid technologies, on the compression in the industry. So there's a lot more than the renewable side. What is happening then afterwards on, for example, elements like offshore wind, which was in discussion, is to be seen. But also, let's be clear, these are projects which potentially would come end of the decade, which you influence now, because there are certain projects under execution, which I do not expect to be impacted. And then we'll have to see what's coming then over the next years. Let's be clear also, the offshore wind market is a market which largely plays today in Europe. So in that regard, I would really say, let's see. The tariffs is something where, for me, the important thing is, are we actually differently set up than our competition? And this is where I say, this is why it's so important, and you have seen it last year, that we also invest into factories in the US. We are creating jobs at the moment in the US. We are really providing with the power transformers supply to the American market, which today has to be imported. And we are building these factories. So in that regard, I would say, let's see what's happening. And then I believe we're well set up to manage the different situations.
Of course, you have a large footprint in the US, but your headquarters are in Germany. So, and Germany has a lack of investment when it comes to infrastructure, also in the energy grid, etc. So, and much is also down to the fact that we don't have that fiscal space. So, if a new government comes in place now next year, and they might actually do a revamp of that debt brake, is that something which would be beneficial for you?
Yeah, first of all, I think we need as fast as possible clarity in Germany. The current situation is not helpful. It will short-term have an impact because what is known in Germany as a power plant strategy, from my perspective, will be delayed substantially. It was planned for 2025. I don't see that coming because even if a new government comes in place, it will take a certain amount of time to reactivate certain views. And this is what we have to see. And that is actually power plant capacity on the gas side, which is urgently needed to replace the old coal-fired power plants. So these things are going to be delayed. So I can only really advocate, please get a government in place as fast as possible. We have now an election day, that's good. And then we have to see on what is the energy strategy of the new government. But this we will see with the elections and the parties coming into responsibility then.
Christian, I understand I've got to let you go now, so we'll have to leave it there. But we've covered a lot of ground already, and congratulations on the numbers. Nice to see you again, as ever. Thank you very much indeed, sir. Christian Bruch, who's the CEO of Siemens Energy. And thank you, Annetta, joining us from moderately cold Berlin. Right, Sylvia, these US markets gave back a little bit of ground yesterday. Is the Trump trade fading a little bit?
That is going to be exactly my question at this stage. It does seem that we are seeing the Trump trade taking a break at this stage, at least for now. Yesterday, during Tuesday's session on Wall Street, we saw three major indices ending the day down. Just to give you an idea, the S&P and the Nasdaq, they broke a 5-day winning streak. And this was actually across the board. Even the Russell 2K ended the day on a negative note. But let me take you to the Treasury space as well, because some interesting things happening in this part of the market. Yesterday, we saw the 10-year Treasury yield actually moving higher. Overall, Treasury yields moved higher during Tuesday's session, and indeed the spread steepening there. And there's actually a growing school of thought at this stage suggesting that we could see the yield on the 10-year Treasury hitting 5% as we prepare to see the United States raising more debt and indeed spending more during the Trump administration. We shall find out, but it is interesting to see how some comments are growing in this regard. I also want to take you to the currency space. Here, though, it does seem that the Trump trade has not dissipated completely. We're still seeing quite a lot of strength when you think about the performance of the dollar. The dollar index was up 0.4% during yesterday's session. And indeed, when you compare the dollar against other currencies, let me get them to you at this stage. Looking, for instance, at the euro moving lower against the US dollar, sterling also moving lower at this stage. So this does suggest that there's still some investors bullish on the greenback. Thinking about Bitcoin, another asset class, another currency, actually, cryptocurrency that has performed very well in the wake of the election. At this stage, we are trading at $86,000 the mark. However, though, when you think about the performance yesterday, for a moment, we did hit the $90,000 mark. In terms of what we are witnessing this morning in Asia, this is how bourses are trading so far. We are seeing downward pressure in the Japanese market, down 1.7%. Hang Seng also trading lower. Here we continue to see investors concerned about what a new Trump administration could mean for this part of the world. And in terms of how we're likely to open in Europe this morning, these are the opening calls. They suggest it could be a mixed start to the trading day here across the European continent. But just to give you an idea, yesterday we did see the Stoxx 600 down almost 2%. Indeed, as investors are also assessing here the risks of what a Trump administration could mean for European companies. Steve.
Yeah, it's been rubbish performance from European equities, hasn't it? And as typified, I think, by Shell yesterday. You got a company that's got a terrific ruling for its plans out of the Netherlands. And what did it do? It fell. There's something very interesting going on in European versus US equities. We'll carry on talking about this. Thank you, Sylvia. CNBC's 14th annual Delivering Alpha Investor Summit kicks off today in New York, where investors and leaders will convene to provide insights, ideas and analysis to help you deliver meaningful returns. We'll bring you the best bits on TV. We'll cut out the not good bits. No, they're all going to be good, aren't they? And online as well. Just search CNBC Delivering Alpha. Right, coming up on the show, the Microsoft president, Brad Smith, tells CNBC, tells Karen actually, he's still committed to growth in Europe despite a change in leadership in the White House. We'll bring you more from that conversation after this break. Plus, Germany eyes a February election as the wheels come off Olaf Scholz's traffic light coalition. And don't miss our exclusive interview with the SSE Chief Executive, Alistair Phillips-Davis, as the company announces half-year earnings. All that and plenty more on the show they call Scorebox.
Microsoft President Brad Smith told CNBC he is still committed to growth in Europe despite a change in leadership in the White House, but urged faster adoption of AI. I spoke to Smith about what the change in US leadership means for his business.
There are opportunities, I think, for this next administration in the US to use technology in new ways, to address critical technology policy issues, even in some better ways. But I think here in Europe, the message I'm here to convey is our support for Europe as a company at Microsoft is steadfast. It's not based on who is president of the United States or who is the majority in the Senate. You know, we've invested more than $18 billion this year in data centers across Europe. They're still going to be here.
That said, you've seen even under the previous administration that Europe has been slower to adopt some of the technology. Is there a risk now that if Europe continues at the same pace, it is well and truly going to be left behind from a US market that is looking to innovate and using any reduction in regulatory hurdles and tax incentives to get going even faster?
Probably the most sobering thing I've heard over the last week and a half was in the Middle East, when one of the major investors there said they were shifting their investments from Europe to Asia because they saw more opportunities for growth in Asia. And as a tech company that supports countries around the world, I do want to see Europe thrive. I want to see European companies thrive. And I think one of the keys to increasing growth in Europe is put AI to work. And that's what we're here to do. But we do need to see AI put to work faster across Europe.
My conversation there with Brad Smith, part of the conversation was what sort of playing field has now been created in the United States. There's real optimism here that is even right down to the VC level, away from the big tech companies, that there could be more M&A, that it'll be a friendly type of environment. I heard that first up from VCs. But from Microsoft's perspective, they're saying, look, the latest deal that they had with Activision Blizzard, they saw that they're at loggerheads with the FTC. They're fighting them in the courts, and this was around everything from progressing the deal to job layoffs to the pricing of games. But equally, they also need to be engaged with regulators in Europe. You may recall it was actually the UK regulator where they also had some issues and had to negotiate. So having a presence in Europe is still key if they have further big deals on the horizon. Well, Arjun's also here with me in Lisbon, and he's been having plenty of conversations. Tell us about some of the headlines that you've been picking up here, Arjun.
Yeah, of course, the key theme here really is around artificial intelligence and what stage we're at with that. And one of the most interesting conversations, and we've just published a piece on it, was with the CEO of Unbabel. This is a translation startup that's been around for about 10 years now, and they've just launched a sort of AI-powered translation tool. And the CEO told me that he thinks in 3 years humans won't have to translate a thing, i.e. completely automated process, and that in 5 years many other industries will go that way. And I think before we get to that stage, one of the big themes here, and you walk around all the stands, is a lot of them are talking about these sort of AI co-pilots or AI agents, this narrative that actually artificial intelligence and some of these new applications that come with it are able to sort of augment and help what humans are doing. But then there are some conversations, like with the Unbabel CEO, that is going the way of saying, well, humans won't be needed in the loop at all. And so this narrative you often hear from the tech companies about, well, no, look, AI is going to help what you do. It's going to help make you more productive. It's going to be interesting to see how that impacts different industries at different paces, and really whether it's just the tech industry trying to soften the blow of really what's to come.
Well, Microsoft had a great example yesterday. They had just been at the Vatican, effectively transforming St. Peter's Basilica, where they were using a digital twin, so you no longer get to have to try and explore elements of the architecture yourself. You can see it in a digital twin. All the bits you might have missed you can capture. Also a digital platform, so you no longer have to queue for hours, which has been a feature for a long time. So it takes away some of that friction that customers have had. But the other part was around restoration, where they could see if a tile was missing, they could go in there and fix it so they maintain the property as it was, which, as you can expect, big ramifications for anything that needs restoration. But for me, what was interesting, we had this big debate about whether we're heading towards super automation or super intelligence, and this was a Goldman Sachs debate. They put the ball on the tee on that conversation. You know, are we really going to get what we want from all these huge investments? And I asked Brad Smith that. I said, look, you know, which direction are we going? Are you over-investing if the outcome is just super automation? And I think he still invests. He still believes super intelligence is coming. He said, look, it's better to have one bad quarter if there's some overinvestment and hype rather than, you know, effectively having a bad decade, because I think we are at a disruptive phase for companies.
Yeah, extremely disruptive. And his comments around Europe and Europe's position is interesting because it's been very difficult. Europe pretty much missed out on the internet age. You've seen some pretty fast-growing and innovative companies pop up right now in terms of the AI space, but it's still very much the US that's dominating. You think across the entire supply chain, all the way down from NVIDIA. And I had a conversation yesterday with a CEO here who said it was very unlikely that NVIDIA's dominance is going to be disrupted in the near term by anyone, including other American firms such as AMD as well, which was interesting as well because of this ecosystem they created. But all the way from that sort of infrastructure side with NVIDIA and the rest of the big cloud companies like Microsoft, all the way through to the applications like OpenAI and ChatGPT. The US has it all, and I think it's going to be incredibly difficult for Europe to compete if those investments that the US is able to garner don't happen here in Europe as well.
Which is fascinating where we're heading. I think that conversation's been quite key. And one of the ones that I had was on stage with the founder of the World Wide Web, Sir Tim Berners-Lee. And that was a fascinating conversation. I did ask him as to whether we were going to head towards super intelligence, if that was coming. He said yes. He said he wasn't the expert, which I think was quite self-depreciating, given if he's not the expert, who is? But he said, yes, we are going in that direction. So that was a bit of a pushback to some who are saying that is not where we're going to end up because the technology is not that clever. I mean, we've been hearing more about that, where you see the deployment of scale at large language models and you keep on feeding information in, and you keep spending money on building this huge data center, and eventually you arrive at this position where you've got this fantastic beast that is super intelligence. But I think not everybody believes that's going to be possible.
No, and the other term, artificial general intelligence, and there's also debate about the sort of what the extent and the abilities of what AGI or super intelligence looks like as well, and obviously the impact. We're talking about jobs in 3 years' time, what the jobs might look like in 10.
Yeah, which is key as we talk about what type of hype cycle we're really dealing with. Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.